First of all, it's very pleasant. It also gives you a degree of freedom, and it also gives you a degree of power.
With George Soros, a name that looms large over global finance and U.S. politics. He's remembered not just for his multi-billion-dollar fortune, but for the power to move markets and sway nations. Nicknamed the man who broke the Bank of England, Soros once forced Britain's central bank to its knees, and just a few years later, his bets rattled the economies of Asia in 1997.
In the last 2 years, you've been blamed for financial collapse of Thailand, Malaysia, Indonesia, Japan, and Russia.
Yeah, all of the above.
All of the above.
Yeah.
Are you that powerful?
No, I think there's a great misunderstanding. I am basically there to make money. I cannot and do not look at the social consequences of what I do.
But what forged a man capable of shaking entire financial systems? And behind the image of a principled philanthropist, what controversies and scandals still cast a shadow over his legacy? Let's dive in. George Soros' story begins far from the skyscrapers of New York or the trading rooms of London. He was born Georgi Schwartz in 1930 in Budapest, Hungary, into a middle-class Jewish family that would soon face the rising tide of fascism in Europe. His father, Tivadar Schwartz, was a lawyer and an ardent supporter of Esperanto, the universal language movement that reflected a belief in borderless human connection. That early idea that society should be open and interconnected would later echo in Soros's philosophy. Though as a boy he had little reason to feel the world was open to him. The Hungary of the 1930s was tense and volatile, shadowed by deep-seated anti-Semitism. When Nazi Germany occupied the country in 1944, survival demanded ingenuity and nerve. Tivadar forged documents, arranged false identities, and hid the family among sympathetic Christian households. For George, barely a teenager, those months left an indelible lesson: a society's order can collapse overnight. And sometimes survival means acting boldly even against authority. When the war ended, Hungary's new reality under Soviet influence felt no less confining. At 17, George looked west for a way out. In 1947, he arrived in a still-scarred London, carrying little more than the funds to cover his first term's lodging and tuition. The city was rationing food and rebuilding from bombings, but it offered possibilities. At the London School of Economics, Soros studied philosophy under Karl Popper, whose vision of the open society would later guide Soros's own worldview. To pay his way, he worked wherever he could, as a railway porter hefting luggage, a waiter balancing trays, even a door-to-door salesman, long before he ever glimpsed a trading floor. By the early 1950s, Soros began to see that while philosophy nourished his curiosity, finance offered the means to shape his future. In 1954, he landed a junior post at Singer and Friedlander, a London merchant bank, where he specialized in arbitrage, spotting tiny price discrepancies between markets and profiting from their correction. The work was tedious to some, but, for Soros, it revealed a pattern: markets, like societies, move on perception, often irrationally. Those years surviving wartime Budapest, scraping by in post-war London, listening to late-night philosophy lectures after early morning shifts at the railway toughened his discipline and forged the belief that change often begins in how people perceive the world around them. They also laid the foundation for his leap across the Atlantic from a refugee student to a hedge fund pioneer whose bets would one day sway entire economies. By the early 1970s, George Soros had outgrown the modest arbitrage trades that first brought him success in London. The world's financial order was shifting. President Nixon's 1971 Nixon shock severed the dollar's tie to gold. Oil prices surged in 1973, and global markets, once relatively predictable, became restless and volatile. Where many saw danger, Soros saw a field of new possibilities. In 1973, he founded Soros Fund Management and launched the Quantum Fund with partner Jim Rogers, one of the sharpest commodity traders of the era. Rather than acting like a conventional mutual fund tethered to a single country's equities, Quantum operated as a nimble, borderless vehicle. Soros embraced what he called the boom-bust cycle, the belief that markets often overreact to perceptions, then swing back hard in the opposite direction. This insight was tied to his famous reflexivity theory, which argued that investors don't just observe markets, their actions actually shape the market's reality. Armed with this philosophy, Soros followed momentum wherever human psychology distorted prices. Through the 1970s and 80s, he ventured far beyond European arbitrage into Japanese equities, U.S. technology stocks, and especially currency markets. A relatively underappreciated frontier at the time, quantum strategy proved extraordinarily successful over its first 2 decades. The fund averaged annual returns above 30%, earning Soros both admiration and suspicion for the scale and boldness of his bets. Beyond being a billionaire investor, Soros became known worldwide as the man who broke the Bank of England. On September 16, 1992, Black Wednesday, Britain's economy was already under strain. The country's membership in the European Exchange Rate Mechanism (ERM) required the pound to stay pegged to the stronger Deutsche Mark. But inflation and slowing growth made that peg increasingly fragile. Soros saw the weakness clearly, convinced the Bank of England could not hold the line. He directed his quantum fund to launch a massive short-selling attack, borrowing roughly $10 billion worth of pounds to sell at a high price, intending to buy them back cheaply after the inevitable collapse. As the pound came under siege, the Bank of England fought back with drastic interest rate hikes, pushing rates as high as 15% in a single day. But the pressure was relentless. By nightfall, the pound had plunged 15 to 25%. Britain was forced to abandon the ERM, and Soros reportedly walked away with $1 billion in profit overnight. The victory cemented Soros' reputation as one of the sharpest currency traders in history, but for Britain, the cost was devastating. Mortgage payments spiked, businesses faced sudden surges in borrowing costs, and consumer confidence collapsed. Thousands of homeowners lost savings or saw property values sink. And the shock deepened an ongoing recession. To critics, Soros hadn't just predicted the fall of the pound, he had helped drive it over the edge, proving that a single investor with enough capital could shake the economy of an entire nation. The shock of Black Wednesday cemented Soros' reputation as a trader who could move markets and even topple them. But the events of 1992 would prove to be only the beginning. Having demonstrated that a single hedge fund could force a major Western economy to its knees, Soros soon set his sights on the growing vulnerabilities in Asia's tightly managed currencies. What followed would be even more far-reaching. 5 years later came the Asian financial crisis of 1997. By then, Soros' quantum fund had grown far larger and more sophisticated, backed by billions in capital and the confidence that came from past triumphs. This time, the target was the Thai baht, pegged at 25 baht per US dollar despite soaring foreign debt and an economy already buckling under pressure. Soros concluded that Thailand's central bank could not defend the peg forever, it would eventually run out of dollar reserves trying to hold the line. In the summer of 1997, he made his move. Quantum placed massive bets against the baht. And on July 2nd, the inevitable happened after spending roughly $30 billion of its reserves. Thailand was forced to let the baht float. Within hours, the currency plunged more than 20%, sending shockwaves across the region, one by one. Neighboring economies, Indonesia, Malaysia, South Korea were pulled into the spiral as investor confidence collapsed. Foreign capital fled, and entire industries ground to a halt. For Soros' fund, the trade brought an estimated $750 million in profit for millions across Southeast Asia. It marked the start of layoffs, foreclosures, and years of economic hardship. Streets once busy with new businesses fell quiet, unemployment soared, governments faced political unrest. Though the trades were legal in open markets, Soros' name became synonymous with the crisis. Malaysia's Prime Minister, Mahathir Mohamad, publicly branded him a financial criminal, accusing him of worsening a collapse that upended millions of lives. Soros denied the charge, insisting that flawed economic policies and unsustainable pegs, not speculators, were to blame. But for many in the region, the distinction mattered little. His bet had become the spark that ignited an already dry field of vulnerabilities. By the 1980s, George Soros' influence had expanded far beyond trading floors. Through the Open Society Foundations OSF launched in the late 1970s, he funded underground newspapers in communist-era Poland, offered scholarships to dissidents in Hungary, and provided photocopiers to reformist academics across the crumbling Soviet bloc. When the Berlin Wall fell in 1989, many in Eastern Europe credited Soros-backed networks with helping nurture the civic institutions that made a peaceful transition to democracy possible. That idealism promoting human rights, a free press, and judicial reform quickly became part of his global image. But as his fortune grew, so did the backlash. By the mid-1990s, OSF was channeling hundreds of millions of dollars annually into civil society work worldwide, while Soros himself became one of the most politically outspoken billionaires in the United States, donating tens of millions to progressive causes and candidates fueling accusations from critics that he was using his wealth to shape politics. Yet Soros's reputation was defined as much by controversy as by philanthropy. His 1997 currency bet against the Thai baht, one of the most famous shorts in financial history, earned his fund hundreds of millions of dollars, but left him vilified in parts of Asia, where the crisis devastated industries and wiped out household savings. The episode cemented his image, fairly or not, as a financier whose moves could rattle entire economies. The shadow over his public persona deepened in 2002, when a French court convicted him of insider trading over a 1988 stock deal involving Société Générale. The fine, roughly $2.2 million, was negligible compared to his fortune, but the conviction fueled the narrative that Soros played by a different set of rules. Through the late 1990s and early 2000s, these controversies, currency speculation that intensified regional economic turmoil, and a European insider trading conviction cemented Soros's image as a man whose power could sway not only markets, but also the fates of nations. Even as he positioned himself as a champion of open societies, critics saw in him the paradox of a philanthropist whose financial maneuvers had left deep scars on millions. By the 2010s, that paradox had morphed into a full-blown caricature for far-right conspiracy theorists, who cast Soros as a shadowy puppet master orchestrating global unrest. In the United States, fringe voices falsely claimed he was bankrolling left-wing movements such as Black Lives Matter (BLM), portraying OSF's racial justice grants as proof he was funding riots and paid protesters. These allegations surged during the 2020 George Floyd protests, when mentions of Soros on Twitter spiked from about 20,000 to over 500,000 a day in just 4 days, often tying his name to Antifa and fabricated stories about orchestrating chaos. In reality, OSF's spending in 2020 included $220 million in support of Black-led justice initiatives, none of which provided operational control or direct funding to BLM itself, which raised roughly $90 million independently that year. Still, the claims dovetailed with other long-running disinformation campaigns. From the baseless accusation that Soros had stolen the 2020 U.S. election by manipulating voting machines to viral hoaxes, featuring doctored indictments linking him to figures like Hugo Chavez narratives repeatedly debunked by major fact-checkers, but amplified by partisan media and online echo chambers. For most of his career, George Soros remained the public face of both his hedge fund empire and the Open Society foundations. But in 2023, the 93-year-old financier formally stepped back, handing the chairmanship of OSF to his second youngest son, Alexander Soros, born in 1985. Alexander grew up in a far more globalized, interconnected world than his father's war-scarred youth. Educated in the United States and Europe, he earned a PhD in history and cultivated relationships with policy leaders, academics, and climate advocacy groups rather than traders on Wall Street. He is often described as more outspoken than his father on issues such as climate change, racial equity, and refugee rights, which supporters see as the natural evolution of the Open Society vision. While critics portray him as even more politically assertive than George, the Soros family fortune, still estimated at around $25 billion. Forbes 2024 now supports OSF's ongoing programs in over 120 countries, under Alexander's leadership. The foundation has promised to expand funding for climate resilience projects, continue scholarships at the Central European University, originally founded by George in 1991, and maintain humanitarian aid to Ukrainians displaced by the war. While these initiatives win praise from human rights advocates, skeptics, especially in Central Europe, argue that the younger Soros lacks the financial acumen and crisis-tested instincts that defined his father's market career. Alexander's public persona contrasts sharply with George's famously reserved, analytical style, whereas the elder Soros cultivated influence largely behind closed doors. Alexander often engages on social media and attends international policy summits, projecting the image of a global citizen activist. Yet that visibility has made him a lightning rod for opponents who question whether his philanthropic vision can remain nonpartisan in an increasingly polarized world. Beyond personalities, the Soros influence is evident in the civic infrastructure they've helped to build. In Eastern Europe, Soros-funded grants in the 1990s supported free press outlets, judicial reform NGOs, and university networks that still shape democratic debate today across Africa and Asia. OSF's early investments in HIV prevention, legal aid for refugees, and education for marginalized communities continue to deliver measurable outcomes. These achievements form what admirers call the golden legacy of Soros philanthropy. Yet the controversies that dogged George Soros's later decades inevitably color his legacy. Policies associated with OSF, particularly support for liberalized immigration frameworks and criminal justice reform, remain polarizing. Blamed by critics in some countries for contributing to social strain or higher crime rates. Financial historians still debate whether his speculative attacks on currencies, such as the 1997 Asian crisis, reflected necessary market correction or opportunistic profiteering that deepened hardship for millions. Taken together, the Soros story is a paradox, a refugee-turned-financier who helped accelerate the fall of communism and open doors to education for hundreds of thousands, yet also a figure whose trading strategies and political philanthropy provoke nationalist backlash and inspired enduring conspiracy myths. As Alexander Soros charts the Foundation's next phase, that dual legacy champion of open societies versus alleged meddler in sovereign affairs remains unresolved. The family's influence now extends into a new generation, suggesting that debates about the Soros impact on global finance and democracy are far from over. For more than half a century, George Soros has stood at the crossroads of high finance and high ideals. He fled war-torn Hungary with little more than ambition, reshaped global currency markets with daring trades, and then spent much of his fortune funding universities, dissident movements, refugee relief, and civil rights campaigns to his supporters. This is the story of a refugee who used wealth to defend the freedoms he nearly lost as a boy. To his critics, it is the cautionary tale of one man amassing enough money and influence to sway policies across continents. That paradox, open society visionary versus global power broker, has defined his legacy and continues to shadow his family's next chapter. Under Alexander Soros, the Foundation's mission is expanding into climate resilience and humanitarian aid, ensuring that the Soros imprint on international policy will not fade anytime soon. The debate now shifts from what Soros has done to what his enduring network of capital and philanthropy might still shape in the decades ahead. Will the Soros model of private wealth funding public good become a blueprint for 21st century activism, or a warning about the unchecked power of billionaire philanthropists in democratic societies? We leave you with two questions. Is Soros a champion of democracy or a dangerous market manipulator? If this influence passes fully to the next generation, how might it reshape the future of global politics and economies? We'd love to hear your thoughts. Drop your perspective in the comments below. And if you're curious about other behind-the-scenes empires that shape the world's markets and policies, watch our next deep dive on another billionaire dynasty whose decisions reach far beyond the trading floor.